This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Hello, good morning, and welcome, everyone. It is Monday, August 25th, and this is the AgYield War Room. I, of course, am AgYield Marketing Manager, everyone's favorite backup host, and the last thing a White Castle employee wants to see at 2 a.m., Jack Coakley. If you got any questions or comments today, we'd love to hear about them. You go ahead, post a comment on whatever platform you're watching on, YouTube, Twitter, Facebook. We'd love to hear what's going on in your head, and we always answer your questions and comments at info@agyield.com. Let's shoot it over to Brian with some overnight numbers.
All right, thanks, Jack. Markets were overnight. We're a little bit higher after ProFarmer came out with their national yields after the close on Friday at a 182.7 on corn and a 53 on beans. So Sept corn up 3 1/4 at 391.5. Sept beans at 1038 1/4 up 1 3/4, and Sept Chicago wheat at 507 3/4 up 3.
Thanks, Brian, for that. Justin, we'll start with you today. I know we have some visuals to incorporate. So yeah, what's going on in your mind today?
Yeah, I think, ProFarmer coming out, I don't know if it was a huge surprise, obviously friendly. If you looked at the state by states that they were coming out with throughout the week, that number was probably a little bit on the low end. I think people generally thought they'll just try to be close to the USDA. But they kind of, put a number, I think, that kind of reflects what they saw or what the raw data was on the state by states. So, yeah, we're up a little bit, making new highs for the move in corn. I think we're kind of getting to some interesting levels here. Like we said, I think the biggest surprise on the WASI report was the extra acres. Obviously the big yield, I think people immediately kind of shot down as like, you got a lot to prove to get that kind of a yield. But those extra couple million acres, really kind of hurt on the supply side. So we're gonna have a big supply number either way, a lot of bushels to handle at harvest. So, this nice flat price rally is welcomed by a lot. I know it'll be interesting as we go into first notice day this week, as we've been talking about, and a lot of people have been talking about, just to see how, has that been already cleaned up or accounted for going into this week? Do we still have a big break as those contracts have to be priced, by Thursday? So I think this will be an interesting, I'll call it experiment, to see, basically a record crop going into this time frame. Do we see enough commercial buying, managed money covering? We're at really interesting price levels, from a technical standpoint. So I think kind of trying to be open-minded this week on what can happen. As far as some other things I think are interesting, Jack, if you could put that meal chart I sent, this is the September versus October meal spread. So you can see if you guys remember in August, we were talking about the massive amount of meal deliveries that were taking place by the commercials, which is really rare. Usually they try to protect board crush margins. So delivering meals kind of something they try to avoid, unless you get into a big oversupply environment. So we saw massive meal deliveries at, close to full storage. So really wide spreads. So you can see here, we went from massive meal deliveries, wide spreads to, 4 trading sessions, a $10 inverse last night. So massive change. There's a bunch of receipts canceled over the weekend. So just kind of one of those things like what not a lot of people talking about it at all. So I think that's one of those things that you just kind of look at, like, what's going on there. I think we talked about this, Ben and I, weeks ago, some talk that, South Americans were having a tough time meeting their export commitments for meal, having a tough time sourcing beans, probably because their export market has been so red hot that the interior crushers, might have had, some tough times meeting their meal export commitments. So did you run into a situation where, you got a surprise on acres here in the U.S., these commercials are the same, right? The ABCDs, they're the same in South America and the U.S. And at the same time, it was penciling that you could bring U.S. beans into South America. And the talk was that we might, see, bean exports to South America for them to crush. At the time, we talked about, well, that wouldn't really make sense. You would just switch destinations. So I'm wondering if you're not seeing something that changed where, we start seeing some meal business get done because the South Americans can't meet those commitments. Just a thought. And we're also getting the period of the year where you start seeing downtime on crush, making those plants, they've been gangbusters on crush, record crush, month in and month out. So that we start seeing some of that downtime before the new crop gets in. So whatever happened, it seems to have flipped a major switch in the commercial's mind about not wanting those receipts out on the market, not wanting to lose ownership of that this time of year. So there could be several things going on. You could also wouldn't be the first time that you just have out of position South America hedges in our market. If they're short board crush and kind of get caught a little bit out of position. There could be several different things going on. I haven't seen any really concrete things. That's just kind of speculation on what could be happening here. But it's kind of one of those things where you see and it's like, is that telling us something that we're not thinking of right now? Kind of went from this, we've been kind of lulled to sleep in these wide carries, oversupply of everything. And then all of a sudden we have in 4 trading sessions go from basically contract lows to a huge inverse. So just kind of something I'm watching there. You had obviously the soybean oil takeoff last week with, some of these EPA announcements. And I think there's still a lot of questions to be answered on that. But you had a massive move in flat price meal versus flat price oil. So, December meal, flat price got hammered against December oil, for example. But then kind of in the background, no one really watching, at the same time, meal spread took off. And there's a massive short, managed money short in the meal complex in general. So I think it's just one of those things to watch. Like we could see something goofy happen. Sometimes I've seen this over the years in different markets where you see this random spike, usually it's weed or something. And you kind of like, oh, that was weird. And then 2 months later, the rest of the market kind of follows that price action. So not predicting that, just, it's one of those things that I just want to watch.
Certainly. Ben, you were mentioned a few times there in Justin's comments. Anything to add there?
Yeah, I think it's going to be really interesting to watch with meal. A lot of the old time traders believe that meal was the true driver of soybeans, and we've seen kind of a flop in that with soybean oil and the expanded crush and what oil means. I can remember when most people kind of thought of bean oil as an afterthought. So this is the first time we've seen something like this happen in these markets, and see if it's something that can stick a little bit and get people to wake up, that there's something afoot there. And, in a conversation that we had before the opening is it still doesn't explain why we have a massive safrinha crop, yet their interior basis is really, really, really strong. So there's a lot going on in these markets. Delivery brings those things out. And here we are. First notice day is upon us for the Sept contracts. You're at some pretty key technical areas in corn. The 50-day moving average is at 17.5. And there's quite a bit of traffic here at 15 to 16. So I think that the corn market is going to, I don't think we'll be sitting here on Friday is what I'll say. So we'll see how that plays out.
I think just to add to that, we're getting close on December corn to touching the 50-day moving average, which is right around 417.5. So, call it 3 cents higher than where we settled overnight. So we haven't, we touched that. The last time we touched that was right before 4th of July weekend. So the 3rd of July. And then we failed. We've touched it several times. We've closed over it once this summer, basically, once or twice. But that's been a really hard area to stay above more than a day or two. So this first notice day is one of the biggest ones of the year. It's the end of the marketing year. We talk about it a lot. A lot of times you break right into first notice day and it's a fade. Conversely, it could be where if we rally and have a really strong close of the week into first notice day, you might have to fade that market as well. So I would kind of put that as like the two different options. I know it's a wide range of what could happen. And that's why I think it's going to be an interesting experiment or history lesson, how we trade here the next 30 days. We talked about all these different crop insurance. There's a lot of stuff going around, are going on at these prices with crop insurance and just a lot of different things. So I would think if you had a big rally into the end of the week, that's probably going to be a fade. Maybe not forever, but it could be certainly a fade for 30 days. And the same if we were to top out today and break super hard into Friday, I would think that'd be a fade the other way. So I'm kind of trying to be open-minded here, just on as far as price action.
Sure. Dustin, what do you haven't heard from you yet? What's going on in your head?
Yeah, a lot of things. So I think just this rally in corn is certainly related to that ProFarmer number. I think a lot of people are kind of sure that the USDA may be off here. ProFarmer is more correct. I can't disagree. I think they went out and did a very thorough job. But we have to be open-minded, like Justin said. And I think if we were going to see first notice day week, the chances would be it's Monday, Tuesday, Wednesday, and Thursday, because it's really the forced selling that's probably the biggest issue. If there are a ton of people that are not returning phone calls, right, like commercials holding these contracts, they automatically get liquidated. That happens. That has to happen before first notice day, so Thursday. Now, not saying it will happen, but that's just the best chance for it to happen. This just happens to be one of those weeks where we have an extended number of futures trading days that occur after we had option expiration, right? Just the way that the date lies. And we also got a piece of fairly bullish information. ProFarmer versus USDA, it's one of the biggest differences of yield estimates right now. So I think the market's trading that. So maybe we won't get the break because of first notice day, but I still think that that's something to watch out for this week. The other thing too is just talking about interior basis levels for Brazil with their record second season crop. Maybe it could have something to do with the fact that they're finally experiencing actual price reduction with us. Like last year at this time when our prices were collapsing, their prices were actually rising. Why? Because the currency fell. There's the worst performing currency of the year of 2024. It's down 22%. So that's a stable price environment when our corn price drops 22%. That makes them more competitive. So I think that we have to remember the importance of currency. It's one of the biggest things impacting farmer decisions. If they're still receiving low prices locally and they've got a record crop, they might just be a little bit slower to actually sell that when there's still big debate on where their currency is going. It's a good hedge for them in a way to keep physical storage of grain till they need the cash.
Gotcha. Anything else, guys, before we head on
just
over to
I wanted to add to Dustin's point because I think it's a good one. If you think about, and you've talked about this for a long time, Dustin, but for years they've been able to buy inputs, the currency weakens, they sell the physical product, they sell their crop, right? So they're naturally just riding this wave up. It's like if you had to buy stocks and then 3 months later sell them, like for the last several years, like it's been working, right? And it's very similar. Well, this year, if you look at what the Real's done since they probably purchased those inputs for some of these crops, it's gone up quite significantly. So it's the first time they've kind of had that headache in a while. So to Dustin's point, it's like we're used to it, right? In the US, right? We had to buy inputs this year, and a lot of people needed a $5 break even, $5 corn to break even. And we never got that, just kept going down. So what did you have? You had a bunch of farmers that didn't sell, leaned on crop insurance and some other things, but never really had that flat price rally. Maybe this is the first time that they're really experiencing with a massive crop. So I think that's a good point, Dustin.
Great stuff. Ryland, welcome back after the weekend. What's going on with cattle?
Well, a lot of news over the weekend, really.
Yeah, the cattle on feed report, I think everybody's kind of looking at it mostly as a little bit of a miss on the placement side of the market, just coming in slightly above expectations. So essentially the numbers on feed 98, placements 94, and marketing's 94. But in other kind of weird news, maybe a little bit of a risk-off situation, but the first case of screwworm was detected in a human in the U.S. So the last time they mentioned that, we went limit down, or at least sharp losses. So I imagine that's probably going to take precedence for right now. Overall, the supply situation definitely slightly better than expected on the placement side of the market, but still, really tight numbers in general. So I think it's kind of there could be quite a bit of a back and forth trade after last week's $7 rally. So still feels like the managed money does not want to leave this market yet. So I think there's going to be a lot of defense played down here. Anybody that's been looking to get in on a break, it seems like we'll put that to the test today. So overall, definitely a little bit on the negative side of the news coming into the day. And then on the hog side of things, actually got a nice little rally. I think everybody is kind of looking at it like pork stocks and belly stocks are going to be on the tighter side. And we did kind of see that on the report. So we did get corroboration of that. Overall cash prices were down 69 cents at 107.66. And carcass and bellies still kind of firm here. So overall, I think that you may see a continuation, a little bit of a technical bounce here. And the managed money still staying pretty long, even after taking off, almost 5,000 contracts the previous week on the commitment of traders report. So with also the Canadian Prime Minister kind of walking back tariffs, these retaliatory tariffs, I think was seen as a positive factor as well. So if those relationships are holding, maybe we see some support here on that side of the market as well.
Great stuff. Looks like, oh wait, where'd I go? Oh, there I am. All right. Looks like we just got into the opening here. Brian, why don't you hit us with the opening numbers?
Yeah, we'll do, Jack. Sept corn 392 up 3 3/4. Sept beans at 1036 3/4 up 1/4, and Sept Chicago wheat up 5 at 509 3/4.
Excellent. Well, if you've been tuning into the show, this is the sign off time. Like and subscribe. That's all I could ask for. I'm happy to report that we are, slowly approaching our goal of 900 and then slowly approaching our goal of 1,000. So, be a part of this kind of growing community that we're building here. It helps us get the show out to a larger audience, and it makes our YouTube algorithm overlords happy. So anything you could do to help us out there would be awesome. And it'll also keep you up to speed on everything we're doing with AgYield, especially on the YouTube channel, special announcements when the shows are coming out, everything like that. Beyond that, we're doing this every day that the markets are open, live on X, Facebook Live, YouTube Live at 8:15 Central Time. I will be back again tomorrow. I know, huge information. There's going to be this surge in viewership, for Jack shows as always. But thanks again for everyone for tuning in. I'll see you tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.